Good afternoon, and thank you for joining us for today's webinar, Cracking the Code 1099-C Compliance Through a Credit Lens. I'm excited to welcome back Alaina Worden CCE. She is the Credit and Collections Manager for Carson Team. Alaina brings over 25 years of credit experience across the construction, trucking, and fuel industries, and is known for building efficiencies within the credit workflow. She's a frequent speaker at credit-focused conferences and a passionate mentor for the next generation of credit professionals. She currently serves as Vice Chair on the NACM Commercial Services Foundation Board and President of the CFDD Portland chapter, and was recently elected as the VP of Member Services and Publications for CFDD National Board. She has been recognized through numerous awards with her services, including the CFDD National Award, National Distinguished Member Award, and Carson Circle of Excellence Award. Alaina is a longtime supporter of the BuildingBlocks community. I'm excited to welcome you back today, and I'll let you take it from here.
Thanks, Lori. Hello, everyone. Thanks for joining us today. Let's go ahead and jump right in. So isn't it frustrating when you have to write off a balance? Those customers who once meant so much to your company now leave you holding the bag, and they walk away with your goods or services. But here's the thing. Write-offs doesn't mean the end of accountability. There is a legal way to push back. Through the 1099-C process, you can ensure that if a customer does not pay your business, they still have to answer to the IRS. Filing a 1099-C means that the debt is reported as income to the customer, and the IRS will expect them to report it on their tax return. So this isn't about being punitive. It's just about being fair and protecting your organization. The cost of non-payment shouldn't fall entirely on your business. And by leveraging this process, you're sending a clear message that accountability matters, and so does your company's interests. So how many have had to write off bad debt this year? I bet a lot of us have. And honestly, this program stems from the frustration I'm feeling as a credit manager, watching these debts go unpaid with no consequences. But let's face it, our companies suffer those consequences of unpaid debt as it affects the bottom line. Most businesses are in business to make money, and when our goals and metrics are not met, the effect sprinkles down from the top, affecting things like our raises, maybe even educational offerings or conferences and classes, perhaps even onboarding new talent or promotions within your own company, or integration of new software that helps us do our job more effectively. Or, you get the picture. Bad debt, no matter the amount, costs our business money. So on my quest for some justice, I started researching 1099-C. I will preface that I'm not an expert, and this presentation is merely my research on how I implemented a policy to handle the bad debt with some accountability. Today, we're going to learn the basics of what is Form 1099-C, why it matters, when it's required. We'll discuss creating an effective internal policy as well as sample a decision matrix to help guide our action and flow. We'll also cover the customer communication requirements, and we'll wrap up with a Q&A. So let's start out from the foundation. What is Form 1099-C? This form is used to report canceled debt, aka bad debt, to the IRS. And that canceled amount is treated as potential income for the debtor. So why does this matter? Because it ensures that proper tax compliance for both sides, the creditor and the debtor. Creditors get the tax relief from the write-off, and the debtor has to pay the income on that canceled debt. Now, here's something important. In some cases, issuing this form is mandatory, but for many companies, it's a choice, and it becomes part of best practices. So it's important to remember that the threshold for reporting canceled debt is $600 or more in a tax year. It's important to ensure that the form is sent to both the IRS and the individual or the business whose debt was canceled. And one more practical point. These forms aren't something you can just download from the IRS website. They have to be ordered directly from IRS for paper mailing. However, there is a way to download the IRS forms electronically, but there's some regulations around this. So we'll want to chat more about this in a later presentation. Let's talk about who must file reports and why it matters. So if you work for an organization that falls under mandatory reporting, chances are you already have a process in place. So mandatory filers include financial institutions, credit unions, federal agencies. These organizations have a legal requirement to report to the IRS. All other businesses fall under a voluntary consideration as long as they apply their policy consistently. So let's talk about what's new in 2025. The IRS has made several important updates that impact how to handle the 1099-C filings. The electronic filing threshold is now much lower, so more organizations must file through e-filing. The numbers dropped from 250 down to 10. There's also been some changes to the event codes and the definitions, so it's critical to review the latest IRS instructions. Also, the penalties for late or incorrect filing have increased. So the penalties vary from how late after the deadline and stem all the way to intentional disregard. So fees range from $60 all the way to $660 depending on the offense. Now this is per form, so it could get rather expensive quickly. There's also some state requirements. So while the federal IRS rules set the baseline, some states have their own requirements for reporting canceled debt, and they can include different thresholds or additional forms. State tax treatments may also differ, so it's important to consult with your legal or tax advisor and check the State Department of Revenue website for guidance and compliance. So let's go ahead and jump into what qualifies as canceled debt and what some of these definitions are. So you must have a qualifying event, and not every event qualifies. So a qualifying event, bankruptcy, foreclosure, a formal agreement to forgive the debt, and the IRS uses those event codes to track these scenarios. So let's go ahead and look at Code A. So that equals bankruptcy. And whereas Code G is a business decision to stop pursuing the debt. Okay. So bankruptcy is one of the main reasons a company might need to report canceled debt, but not every bankruptcy means you have to file this form. The key thing to remember is that if a customer's debt is officially wiped out, meaning it's been discharged in the bankruptcy, then your company is not going to try and collect anymore, then you need to report it. If the bankruptcy is still in progress, or if your company is still trying to collect the debt, you don't need to file the form yet. If the debt is secured by collateral, sometimes it's the only way to collect. The only way to collect it is to take back the property, like a car or equipment. So you may not need to file the form at all. And then timing is really important. Only file the form after the debt is truly gone and your company has stopped all collection efforts. Of course, there are special cases. If one or more company is owed money, only the company that actually forgives the debt is the one that should be filing the form. If someone else, like a cosigner or a guarantor, is still responsible for the debt, you don't file the form until their part, unless the debt is also forgiven. So if the business owes the debt, they're not responding, and you're going to go after the guarantor, you shouldn't file the form until you've exhausted all your resources with the guarantor paying that debt. If the guarantor doesn't pay the debt, then you would report it. The bottom line, make sure your debt is officially canceled before reporting it. If you're unsure, check with the IRS or ask a tax professional. Some debts and entities are excluded from 1099 reporting. So Some examples are debts that have been fully discharged in bankruptcy or canceled as a gift or not reported. It's important to know that corporations and certain government entities are also exempt. So the next thing I want to do is really kind of jump into how to file the 1099-C form. First, you want to kind of have a checklist of the required information. So you want to collect your W-9s before the payment or the debt is canceled. You want to verify that those the TIN numbers are accurate. You want to track the canceled debt amount. And then you're going to file and send the form by the deadline. You're going to use e-filing if it's required. You're going to keep the record of it for 7 years. If any errors come up, you're going to quickly report them. And then you're also going to train your staff to review the policy. So copy A of the form, 1099-C, goes to the IRS, and copy B goes to the customer. So that's the debtor, whoever the debt is being canceled for. Also, it's worth noting that copy B must be sent to the customer by January 31st of the year following the debt cancellation, and a copy A must be filed with the IRS by February 28th, if filing by paper, and March 31st if filing electronically. Now, as I said earlier, you do not want to print a file of copy A from the IRS website. A penalty may be imposed for filing with the IRS for information that can't be scanned. So if the form that you're trying to download is red, it is not scannable, and that is not the right form. So just make sure that you're navigating to the correct page on the IRS website to download the correct copy A and copy B forms. So having a clear internal policy helps ensure fairness in your quest to show accountability. Also helps with being audit ready. You should set reporting thresholds for consistent collections of your TINs. So the W-9s, as you're opening accounts, make sure that you're requesting those or you're able to track that. If you don't have that information, you can't cancel the debt. So as I alluded, good documentation is your best defense in an audit. So keep copies of all filed forms, supporting records, and communication. You want to make sure that every canceled debt has a clear audit trail, including how decisions were made and who approved them. If the IRS or some sort of internal auditors require information, you'll want to be able to provide that quickly. So regularly review your process and identify and fix any gaps that you might find. Technology can make the 1099-C compliance much easier. So if you have an ERP system that can help track bad debt or some sort of automation, IRS approved e-filing solution that helps to streamline the process and the record keeping. If you're able to integrate those tools with your accounts receivable workflow, it will ensure the consistency and reduce the manual errors, saving time and improving your compliance. So next I want to walk through the decision matrix. So depending on, this is just kind of a quick screenshot of a way of tracking the criteria of what's required. So you would want to ask, is the debt that you're trying to cancel over $600? Is the debtor an individual or sole proprietor, or is it a partnership? Remember, you can't file on corporations and you can't file on government entities. Do you have your W-9 with the required information, right? And If you're answering yes on all of these, then you are able to move forward with your process, and you're good to go. You're hitting all the right buttons, and you should be within requirements. So I do want to break down kind of the key differences. And so individuals, sole proprietors, and partnerships, the IRS wants to ensure that the canceled debt is reported as income, so these entities must receive the 1099-C. As I mentioned, corporations are exempt, as well as government entities, and there are some other entities that are. As best practice, you may want to send a debt forgiveness letter to a corporation. It provides clear record that the debt has been formally forgiven, which is important for both parties, accounting and our audit trail. It also ensures that the corporation understands the status of the account and that no further action will take. It maintains good business communication and standards, and it could be part of your internal process. So let's talk a little bit about foreign debts. So 1099-C reporting generally limits it to U.S. persons and entities. If you have a foreign debt, they may not be subject to these requirements, but there can be some exceptions. So I would just say consult with a tax counsel to discuss cross-border transactions to make sure that you know whether or not you could report that one or not. So there really, you want to kind of develop 3 different types of letters: a final opportunity letter, a conditional forgiveness letter, and a debt forgiveness letter. So that one would be no IRS filing. You want to make sure that you avoid misleading any language and always clarify the tax implication for the customer. Now, you're going to have customers that are going to come back and try and dispute your 1099-C filings. And if that happens, it's important to have a clear process for handling the disputes, including keeping records of all communications and the resolution. So you want to respond quickly and professionally and provide resources like the IRS publication 4681. That's to help the customer understand their options. If you discover an error, however, when reviewing it, you want to update and file and then re-notify both the IRS and the customer. So let's do a quick recap. Investigate your dispute, review the customer's concerns and details of your filing, check your documentations to make sure that everything is accurate. You want to respond promptly and professionally, so you want to acknowledge the dispute and explain the process. You want to provide the customer with the IRS resource publication 4681 to help them understand their options. And then if through this process you discover that the 1099-C was filed incorrectly, then you want to correct it and send the notification to the customer and to the IRS. Keep in mind, if the original filing was correct and you are still required to report that canceled debt to the IRS, so you cannot withdraw a valid 1099-C simply because the customer disagrees, unless you find a genuine error. So if a customer calls up and they're angry and they start complaining, why would you do this? Why did you do that? And you just want to save face because of XYZ, you can't. Unless there's an actual error on the form, it has to go through. You cannot pull it back. And then you want to advise the customer that if they believe the 1099-C is incorrect, they can dispute it themselves with the IRS when they file their tax return. You should also encourage them to consult a tax professional for further assistance. So let's dive into kind of the letters a little bit. This first letter option is really just letting the customer know if they fail to respond or remit payment, it may result in the account being classified as uncollectible, and we may consider reporting the canceled debt to the IRS via the Form 1099-C, which could have tax implications for the customer. And then you want to say this is not a debt forgiveness notice. We are still seeking full resolution of the balance owed. So per IRS regulations, you cannot say you're going to file a 1099-C and not do it. You also can't pick and choose which customers you're going to send it to. So you have to do the same for like customers. So it's important that when you're building your policy that you put a process in place of making sure that the canceled debts are within certain dollar thresholds or within certain product lines or whatever makes sense for your company, so that you would do it across the board for everybody who falls into that category. Okay, the second letter that we have here is more of a conditional debt forgiveness offer. So we understand you're having financial challenges. We want to offer a conditional forgiveness. If you pay X amount, so this is your settlement amount, then the debt is then forgiven, right, of whatever dollar amount. So it is truly a settlement. So you want it to be a reduction of whatever dollar amount you choose, and then letting them know failure to meet those terms may again result in the debt being canceled by the IRS. And so this letter kind of gives a little bit more flexibility, that you're putting the customer really on notice that, hey, we're going to move forward with this, but let's save everybody from having to do this, and let's settle for a lesser amount. Oftentimes you'll get customers that will then work out a payment plan on that one. And then the final letter is really letting the customer know that you're confirming that the outstanding balance was not paid and it has been canceled. And in compliance with the IRS regulations, we have reported this debt using Form 1099-C. And then the customer will receive notification that they will need to report it as income on their tax return. So now I want to dive into kind of creating a policy. So this is a very generic kind of sample policy. Most bigger organizations have a flow on what their policies need to look like. And so I wanted to, though, have a sample policy for companies that may not have any structure behind what their policies look like, to kind of give a starting point in this. So it's important that you add a definition and your compliance requirements in your policy. It's also important to include who's responsible for the task, and then who would be backing up the task if that individual is not able to do so. Remember, we are up against timelines, and we want to make sure that those don't get missed so we don't get penalized for that. And then I would also include a section for annual audits and record retention for this process to ensure compliance. We want to make sure that you're checking the IRS website every year for those changes. And then we want to make sure that we have a policy enforcement and staff training in place. So even the best policy is only effective if everyone follows it. So providing regular training for staff on the 1099-C procedures, it helps to monitor compliance. You can address any issues that come up quickly. You can encourage feedback from your staff to make sure that you're able to navigate those regulation changes. So this concludes my presentation. I'll open up the floor for Q&A. Thank you.